Good morning, everybody. Comment allez-vous? Just enjoying my breakfast. Let's go. So, good morning, everybody. Today is a Tuesday, the 9th of October, 2018. This is your daily Forex trading webinar brought to you by Forex.Today, or hosted by Forex.Today, brought to you by Traders Way. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hang on, something just made the strangest sound. I think maybe a message popped up on my phone or something. Oh, eBay. eBay installed an app, now it's yelling at me. Good, maybe I'll uninstall the app. Okay. So, let's go through the charts, look for our setups. First time, how'd you find us? Today's your first time to join the webinar. How'd you come across our webinar then? Let's get this out of the way. There you go. Okay, yeah, well. Cool. Been doing webinars, Forex webinars for 15 years. So, welcome to day one of the rest of your life. All right. So, where did we leave off? I left off on some Aussie pairs. Looks like Aussie, 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 Aussie. This was a conversation about scans and relative strength. I believe we started yesterday on the USD Swiss franc, or sorry, the USD scan. By the way, do you mind if I adjust this a little bit? Is that okay? No, it's a little dark, isn't it? I guess if it's not my eyes, it's not working. Okay. So let's start to the far right this time. Okay, we had two things going on here. We had obvious support, both on a monthly or a weekly. So there was short-term upward pressure into this gray zone, which we identified at the time, which is a cluster of a weekly central pivot and a monthly what? M2, M3, S1, I don't know, it doesn't even matter. Up into this area. And then you can see now it's coming down off that resistance. Cool. It's still not a good short unless you caught it way up top. But the assumption is it should come down at least this far. Now, if you're a bear, you're hoping it goes a little bit farther. Remember, hope's not a strategy. Oh, I can't grab this one. There we go. So maybe, just maybe, that you hit the next target, which is down here. Okay. So bears should have already sold. I don't know. It's like 8 hours late. I don't know if you should be selling it now. But their target is either here or here, which means plan A for bulls is buy it there. Plan B would be to buy it here. Okay? You see what I mean? Bears should have already done their thing. Bulls are looking at maybe a double bottom at this obvious support, or the bears get lucky, they drive it down, and then the bulls would look for the same thing. They would look for a bounce down here, the same as they did here, the same as they will do there. Okay. Now, which one are you? The setups are pretty straightforward. You can see like this would have, excuse me, this drop would have been plan A, this drop would have been plan B for bears, right? So bears, sell here or sell here. Bulls, well, actually buy there or buy there. Okay. And I think what we talked about yesterday was if you bought it here, you have a good chance of getting knocked out at break even, and then you re-enter. Versus, do you remember this conversation now? It's starting to trickle into my old man brain. We talked about taking the, let me zoom in maybe. If you double bottom, if it double bottoms and you get knocked out at break even, because if you get knocked out, it'll probably drop all the way down to here. So you just take your profit, right? Or you, in this case, get out of break even. Then it starts rising up. You re-enter the same trade. And you're like, well, Wayne, why don't I just be brave and stick it out? Well, because if it does fall, it's going to fall, and you're going to lose money. So what you're risking is pride, first of all. And second of all, if you have to re-enter the same trade long at basically the same price, but after the double bottom, well, first of all, you removed risk, and then you reduced risk. And then lastly, the cost for that is the spread, which is, what is that? A half a pip right now. The spread on the Aussie dollar at Trader's Way right now is a half a pip. Yeah, that's too much, right? I mean, it's not too much. So you risk having this drop from 50. Yeah, you're risking it dropping 50 pips to the next level. Okay? That's what your risk. So if you get knocked out here, remove that risk. And then if it bounces again and creates a double bottom, just buy it after the double bottom. But you've avoided this whole, tippy-toeing on a cliff. Cool. No question, so I'll keep it moving. Okay, seems to be bearish, eh? Oh, for sure. Consolidation, drop, 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 drop. Look, it's still dropping. Okay. What's the target? We're almost there now. 114 should be it. Or at least 114 is where risk increases significantly for bears. Well, Brooke, were you talking about the Aussie? Hammock. Yeah, you can play it that way for sure. Oh, for sure. Yes, you can. What Brooke is astutely recognizing is that you could play this as a double bottom. Okay? Then it makes a higher high relative to the previous high. So I'll do it this way. Shapes, I guess. Okay. That high versus that high. Okay? So Brooke's like, well, you could buy it on a 1, 2, 3. Yeah, and you'd expect that to happen right around here. Yo, Oliver's. I don't have an FX book address, sorry. Okay, so yeah, you could set that up for a long there. It's the same thing, kind of, right? What you're saying is, well, can we go long here? Yeah. Yep. Cool. What do you want to do? Well, I think we can agree this would be a terrible place to sell it. Is anyone going to buy it? So the interesting part about this is the weekly. Maybe I lost the stream there for a bit. Sorry. Yeah, sorry. It's back though. So what I was saying is bulls are down here quite clearly, and bears sold exactly where they were supposed to sell. So we know they're there, but we're lacking a solid trend. So anyways, bears are trying to get down to here, but they're struggling. So you can't really sell here, or you shouldn't really sell here, but you could start to look to buy it. Just be cautious because we know there are bulls in this. Did I say bulls? Man, I'm screwing this up. Double bottom, higher high, and then what? Bears sold exactly where they were supposed to sell. So whoever sold there, whoever sold right here is expecting it to go there. And they're going to be very disappointed if it doesn't do it. Okay? This would be a terrible place to sell now. I don't believe bears live here. So what would a bull want? A bull wants to take it from there to there. Okay? Which direction you pick is up to you. Okay? Should have sold it on Monday, or now that it's Tuesday, you might have an opportunity to buy it. It only depends on your bias. Okay? Could you possibly be a bull here? So we've had a lot of conversations yesterday, or recently I should say, about simply using support and resistance, and nothing else matters. Anyone can see. Nothing really matters except support and resisting. So you can see these are the very basic versions of it, right? Obviously somebody bought it here, it was support, and they might buy it here as well. Okay. Ni hao, Mayor. No, Peter. Well, yeah, you know what, Peter? Yes. Okay, let's go back to Monday. Peter said it's not a swing if it's Tuesday, right? Well, let's be careful. Let's not have too many hard and fast rules, okay? So let me be clear on what I said in the past, okay? That's a swing trade, no doubt, for bears. Bulls didn't have their opportunity. So this is kind of like, maybe here was their first opportunity, but yeah, they can still be setting up. Okay, if it's Thursday, no, come on, right? So, right, so bulls should have bought it yesterday. Maybe it was too late. So anyways, it's still a chance. Like I said, it's not a good place to sell. So you might as well be waiting for as a bull, right? Okay, bears already did what they were supposed to do, and they should be happy. Okay, look at that. USD Swiss franc. Swissy's weak. I have a question. When selling high, well, first of all, I don't recommend that. When selling high, how do you determine the zone you might make your entry? Well, that's what the pivots are. Okay. It's not really a zone, right? Like, for example, on that other one, it was a weekly M3, right? So that's not really a zone, that's a price. Which one was that? It was pound, wasn't it? Okay. So that was available when the market opened. Sunday afternoon, 5 p.m., the market opens, you're on the M3, and you're a bear. You sell it. You see what I mean? It's not really a zone. So in that circle area, you know, I'd be on a 1 minute chart. I don't know if I can even get back that far. I can't even get back that far. But anyways, yeah, it's more of the timing. It's the exact price you want at the exact time you would expect it. So you just take the shot and you're done. Okay. Life is a Sketch wants to know how to get the pivots and how do you install them. Click that link. You're off to the races. And then John says, I'm using pivots. I find myself waiting to... Why don't you just pull the trigger? So John, you go onto a 1 minute chart, you get a 5A cross down, and you sell. Now, selling high is the difficulty, and you never want to get good at that. Because there's a reason you don't want to do it. You're not supposed to be selling high. You're supposed to be buying low. Right? So the only time, you know, you're selling high is when you have a reversal pivot and it's early in the period, right? So like, when do you sell that? Generally speaking, if you remove the skill completely, you're probably better off. That you just say, you know what, I don't have the capabilities. I don't have the skill set to sell that high. You're probably better off. Okay? So John, what you're probably better off doing is waiting for this, and you sell that. Now you sell. Okay? Renko, try it again. Try that link again. So guys, look, statistically I can tell there is a problem. I'm not sure what it is, but statistically 80% of people are getting the files. Okay, 80%. So I have to figure out why 20% are not doing it, or not getting it, but 80% are. So I don't know what it is, whether it's the, I mean, I believe the emails are going out. That's what I believe, because a computer doesn't say, oh, well, this guy's from South Africa, I'm not going to send it to him. You know, that hasn't been programmed into anything, right? So, yeah, so I got to figure that out, but, right? John says, Wayne, the problem is, yeah, but see, I can't do anything about that. Right? But try it again. There were some bugs. We ironed it out a little bit. Just try it again. Yeah, it might be a racist program, right, bot? It's Google servers or... You know, funny thing about like racism in America, uh-oh, here we go. I was just thinking about like I was watching a Google presentation. It was an internal, where an all hands, where all these Google employees came into a giant auditorium, and the CEO came out, and then a whole bunch of senior managers in charge of all these different Google divisions. They all gave presentations, really fabulous presentations, right? About their departments, like what is Google Home doing, and what is Google Photos doing, and all this kind of stuff, right? And the guys are coming out, big presentations behind them, one Indian after another, Indian, and I'm like, America, I love this country, right? You're like, yep. America. Yeah, well, John, I don't want to do that, John. That's the whole point. All right. So I don't know. Google servers, are racist, maybe because they prefer Indians. I don't know. So off we go. HOTTOGO. Buy there, sell there. Where would be like a plan B on this? See, I don't really like selling at the R pivot. I don't really like buying at the S pivot. So that really puts us like quite high into the game, right? Like way up there is a sell. Price pivot, right? So, and and if you look at the math of what a pivot point is doing, it knows that resistance is there. That's why we drew a pivot there. Yeah, well, right? Luis has got it. Yeah, well, like I said, I can see the statistics, guys. I can see the statistics. More than 80% of people have no problem. So I will try to improve that, because that's not good, because I know 100% of the people want it, but I don't know why. And right now I got a lot going on. But I'll try to improve it. I might even rebuild the whole thing, but 80% is a B. Okay. Million Bitcoin email, huh? Good job, man. Holy smokes. All right. USD CAD, I think. Somebody had a question about that. All right. Does anyone remember drawing this support like, hey, dude, this is going to be support? I guess I got to go back to the hour. So I think I got that one right, huh? Well, Brooke, let's look at it this way. Maybe the dollar's strong. No, meaning the US dollar, sorry. Okay. Another thing you might want to look at, Brooke, is go to the Bank of Canada website, download some of their reports, and see what the future expectations for interest rate hikes in Canada is, and then make that relative to the United States. So, for example, let's say Canada's raising interest rates, America's raising interest rates. Which one is going to be worth more? And the answer in the textbook should state the one that's going to raise, or is expected to raise interest rates further or even faster. So for example, if we thought the United States was going to raise interest rates to 3%, but Canada only to 2.5%, the US should win that battle. All else being equal. Now, the Canadian economy isn't as big as the US economy, but they're very similar economies, right? They are quite different, by the way. Canada, I would dare to say, never was in the global financial crisis. The Canadian banks were sound. They didn't take crazy bets on real estate. It's just not the Canadian way, right? So there was this guy at the Bank of Canada named Mark Carney, and he worked with the Canadian finance minister who, you know what, I can't remember his name. He died not that long ago, but he was a heck of a finance minister, and he and Carney, I think, agreed on a lot, and they kept Canada conservative while America was going ape shit over selling poor people expensive houses and cars, right? Well, while the bankers were ripping off taxpayers, basically, because they knew they would get bailed out, Canadians were very, very conservative and better-looking people. Happy Thanksgiving, Canada. So anyways, there is a difference between the two economies. So you can say, oh, well, Canadian bank and American bank. Well, you know what? I think on Wall Street, they laugh at, like, Canadian banks that are also on Wall Street. Like, right? So that's that. So there are major differences, of course. So Canada didn't go into the financial crisis of 2008, 2009, 2010. So what, you know, is there any proof of any of that being true? Well, the Bank of England, right, probably the oldest central bank in the world, hired the Canadian central banker to run the Bank of England, which I think is just amazing. Oh, the Canadian real estate market is out of control and ripe for correction. Yes. Well, so there are many things that you should be observing on that. Now, you're probably looking at prices. Okay, sure. The thing what you should do is drill down to occupancy rate. And you want to look at three things. The headline occupancy rate, the occupancy rate versus the 18-year trend in occupancy rates, or the average or historical occupancy rate. And the third one is, the direction in which basically, you know, relative rate of change it is over the, you know, recent term, over the last year, let's say. Are occupancy rates rising or falling? The headline, right? And are they moving toward the historical 18-year average or away from the historical 18-year average, right? So if they're moving toward the 18-year average or below, even more importantly, below the 18-year average, you will still find very high real estate prices, but it's about to crash. You could be falling toward the 18-year average, which means actually occupancy rates are falling, but prices are still going to go high, because what you're looking at now is not whether there's people renting and buying, but you're trying to measure scarcity. Okay? So anyways, so you want to look at that before making judgments on the real estate market, because 99 times out of 100 people will come up and they'll say something like that. They'll say, you know, the Canadian real estate market is out of control, it's on fire. And what they mean is pricing. But pricing is the dumbest way to measure the real estate market. That's the dumbest way. Because by the time prices fall, you're already doomed. It's already over, bro. You should have got out a year ago, maybe 2 years ago. And you say, well, how do you know when the top is coming if prices haven't fallen yet? Well, you have to be wicked smart. So anyways. So yeah, you can predate, you can see the real estate market crashing probably a year before prices come down. By the time prices come down, you'll never get out. You'll never get out. Never get out. No one's going to buy your crap because they realize the people that buy this stuff, they've already been struggling for a year because occupancy rates have been falling, even though prices haven't been falling. And then what? Now you really are desperate to sell, so you're trying to sell like crazy. Occupancy rates are falling, right? And now what? The idiots that borrowed a whole bunch of money from banks to build new inventory, to build new houses, to build new apartment buildings 2 or 3 years ago, because it takes 3 years to build this stuff. So they started building in the peak, and then the market peaked, and occupancy rates have been falling, but prices are still going up, so you held onto your real estate. Now real estate prices are falling. You can't get out. Interest rates are starting to go up because the real economy now is crashing, and guess what? All that inventory that they started 3 years to build are now coming online, and occupancy rates are going up and up and up and up and up because people are leaving and more inventory is hitting the market, and you can never get out, and interest rates are coming up, so now you're dead broke, and the bank is jacking up your interest rates, and you're screwed because you're watching prices, eh? Don't watch real estate prices. That's what amateurs do. Anyways. Yeah, the best way to just, the best way? So, yeah, whatever. So, yeah, is this a good place to buy it? No. Is that resistance? Yeah. Okay. If we got up here, I would have to, like, I don't have a choice. I would have to look to sell around $130, what is it, 130.75. Really closer to 130.50. Okay. So if I was a bear, here's what. Here's the here too. I might take a shot there. I don't really think it's going to work, but it's $1.30. It's a pivot. It's a pivot. Yeah, okay, fine. If we're up there, I'll definitely want to take a shot as well. That's it for bears. Bulls, you should have front run it on Friday. Front ran it. Okay. Obvious entry there. And that's it, really. There wasn't anything since then. I mean, I guess you could do the re-entry, right? I don't know how obvious you want me to get into the trades, but, a higher high, higher low roll reversal is pretty straightforward. So that's there. So bulls would have bought on Friday, done it again yesterday, right? And bears are thinking about it now. We're getting ready later. John says, why are you saying it's straightforward to buy low at the correct levels of hard? Oh, because you're going against the trend, John. You're not supposed to be selling high. You're supposed to be selling lower highs. So therefore, technically speaking, you're selling low. Okay, you're supposed to be selling this, Johnny boy. Okay, so the way I understood what you said, was you said to sell high. So I interpreted it as this, okay, not this. Might just be a misunderstanding, and if so, I apologize. You want to sell lower highs. Okay, so like when you get this is why I drilled people through hammock. Now, maybe that was 3 years ago, 4 years ago. I don't remember when we did these things, but I drilled people over and over and over again for quite some time about, before you trade against the existing trend, what you need is to practice and drill over and over and over again the double top lower low or the double bottom higher high. And that's the birth of your reversal. And I'm pretty sure that's the advice I gave you probably 15 minutes ago. Okay, because when you're in this situation, the secret word for that is hammock. And there's no reason for it except for a story I told as far as anchoring using neuro-linguistic programming. But nonetheless, in a scenario like this, you wait for it to retrace and now you sell at the gray zone. Okay, and then you dump. So the beginning is double top, right? Forget this pivot by the way, just forget that pivot. Double top, lower low, then drag this across, lower high, sell. Lower high, not higher highs. Okay, so if I misunderstood you, John, I appreciate it, or I apologize. Okay. Brooke says, no rate hike in 2018 for Aussie. So, if that's the case, you would not expect Aussie to strengthen until, okay, you listening to this? Until rumors and hints and central bankers go wink, 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 and which the wink, wink, wink doesn't even have to be true, is interpreted by the market as the Reserve Bank of Australia is thinking about maybe raising interest rates sometime soon. So we don't even need facts, guys. Now, here's the other thing about economics. It's all lagging. GDP last quarter, who cares? You know, you see how the market freaks out all the time about GDP, GDP, GDP. GDP, what happened last quarter? What happened 6 months ago? Because you have to say, well, you have to wrap up this quarter, but by the time you get GDP last quarter, we're almost done this quarter, right? So it's literally like the economic the economic report card for the United States of America dated 5 months ago. Well, 5 months ago, think about how many CPIs and PPIs and PCEs and ISMs we've had in those 5 month periods. You're like, dude, that is so long ago. Or how about this? Like when the U.S. economy is in recession, it takes like a year for them to say, hey, I know everything is collapsing, but we just want to let you know we have determined this is a recession. Like, dude, you're like a year late, right? So what's even more important to traders? Because you're a trader, not an economist, right? To a trader, you have to understand all the economics, because there's trends there, what has been happening, but what's happening now is also important. And then you got to go one step further than that, which is 2 steps beyond an economist. This is why economists make $60,000 and traders make $600,000 a year, because they have to think about now, but they also have to think about the future. What does the market expect to happen in the near future? Okay, that's always the money maker. Where are interest rates going to be in 6 months? Where are housing prices going to be in 6 months? What's the value of gold in 6 months? What's the value of dollar in 6 months? What's the value of oil in 6 months? If you can't answer that, you're not a trader and no one's going to invest. But you should maybe consider being an analyst. You can work in the basement of a bank somewhere. Drinking drip coffee that stains your teeth orange. Or you could be upstairs with beautiful glass windows drinking imported Italian espresso macchiatos, right? With cocaine. Right? There's a difference between a trader and an analyst. That's all I'm saying. So, do you understand? So, let me just say it differently. If the market of traders thinks, even wrongly, based on rumor, based on voodoo magic, based on migration patterns of African elephants, somehow the market thinks the RBA is going to raise interest rates soon, just soon, whatever that means, like the next meeting or the meeting after the next meeting, Aussie dollar starts going up in value. They're front running it. All you have to do, all the market has to do is think it is possibly going to happen. Doesn't even have to be factual. You understand? But how could you know that if you don't even know what's happening now or in the past? You're not even an analyst, right? What is you, boy? Like, don't they say that in Officer and a Gentleman? Forex trader. Nothing in Forex but queers and steers, and I don't see horns on you, son, so what are you? Right? No, I'm not a trader. I'm just an analyst, right? So, right? So Brooke says, hey, Australia is not going to raise interest rates in 2018. Whether that's fact or not, if the market agrees with that, you would think the Aussie dollar would fall and keep on falling, not until the RBA says we're going to raise interest rates. It's already over by the time you've done that. By the time they've said it, you should already be in it. So how do you know? Well, the rumor would have happened already that they were thinking about maybe doing that, and people start front running and start buying it up in anticipation of the free money rally. No, that's not Full Metal Jacket. I think it's Officer and a Gentleman. At the very beginning of the first scene, when they join and all the hippies are joining, right? And then it's the end, right? One with Richard Gere. Okay? But yeah, so it's not the comments either, right? Crystal says, yes, I'm amazing. Yeah, and that can be sort of, maybe it is. I mean, you can take that and put that into your sort of opinion piece, your sentiment area. Okay, but these things are important, but they're always important. Like, for example, will you borrow a large sum of money if you think the Fed's going to raise interest rates tomorrow or next month? Well, it depends. If you're in a fixed rate mortgage, yeah, you want to do it now, lock in today's rate because you assume the Fed's going to raise interest rates tomorrow or next week, okay? Now, if you're a variable spread or a variable mortgage, right, and you're like, well, if they raise tomorrow, my monthly payment will go up, but then they'll probably raise again, and then it'll go up again, and then they raise again, and then my monthly payment goes in, and interest rates could possibly go so high that my investment project will be unprofitable. So then you're like, well, forget it. Well, the thing is, it hasn't happened yet, and you're supposed to be making decisions. So go back to what Forex really is. Is it Forex, a bunch of people with $1,000 accounts throwing random trades into the market? Is that what Forex is? Is it really hedge fund managers, right, using sophisticated algorithms and buying billion here and selling a billion there? Is it Coca-Cola and IBM and Nike and Apple moving money around to their subsidiaries? Is it real estate investors doing stuff moving here? Is it bond investors with trillions under management simply buying bonds for 30-year durations? Is it insurance company hedging long-term risks? Is it real estate investors that want to go to Sydney and build a new building, or even better, go to Hanoi and build a new skyscraper in Hanoi because they want to get into emerging markets. But to do that, they need to move a few $100 million. Like, what is really moving the market? And it's the business side, guys. It's the business side. If a third world country needs to buy oil, they need to buy US dollars to buy the oil. So they need the US dollars. Like, it's the business, common everyday stuff, right, that drives the foreign exchange market. And these people are thinking, not like you, like, oh, where's the S2? Oh, is that a 5A cross? Is that a rising star reversal pattern? Like, dude, nobody's thinking about that, right? So what are they thinking about? Will this project be feasible if I invest the money that I borrow and interest rates go up for the next 4 years, right? Will I still be profitable if I build this project? And if it's not, and if it's unclear, like, well, maybe, maybe not, or clear, like, definitely not, the project doesn't get done. Is that right, Harley? I wonder if they're both movies. Well, it sounds like you got it. It's probably the oldest joke in the world, too. So maybe it's that as well. I wonder if they're both. All these stairs and queers. Bears come from Texas. I swear, though, I can see it in The Officer and a Gentleman. It must be something similar. It's an older movie. It's even older than Full Metal Jacket. All right, so anyways, let's go over this just quickly. Ready? Free lesson here. Ba, 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 ba. Is this high higher than that high? So, oh, I forgot the lag. So I'll just answer my own questions. This high, higher than that high, drag this across, that's a buy zone. What do I mean by that? It means when you're up here, and this is a 5-minute chart, so you had a half an hour to prepare. I know, only a half an hour to buy somewhere in that gray zone. And you're thinking about it when you're still up here. All right, so now you're way up here, and you're thinking about your next trade, right? So you say, oh, well, this used to be the high. That used to be resistance, so I'm going to grab this. And I'm going to wait, and somewhere around here, I'm going to buy. So it falls another half an hour or more, and you buy it there. I mean, come on, half an hour between trades.